One of the best ways to 10x is create cash flow from assets so that every active dollar can build more assets. Now you have 100% of your income going into something instead of 10%.
There are ways to get even more complex with life insurance.
Yeah.
I talked about yesterday how if it's, if you're trying to, it's hard to say like, what's the best? Because it's a lot of it's situational, right? Is it better to have no life insurance or term life insurance? Term life insurance. Is it better to have term life insurance or whole life insurance? Whole life insurance. Well, once we get into like a permanent life insurance structure, we've got three pretty amazing ones. You've got whole life, you've got premium financed, you've got private placement.
Right.
I'd love to talk about some of these other policies and why it makes sense. Like, what are the advantages to doing it?
Yeah, what's cool about private placement is you're basically setting up your own insurance policy using the same tax structure that the insurance companies have. So it's designed based upon a tax code, and you just have to have a third party manage the money inside of there. You can't do it directly, but that third party can do it. So there's people that exit their business and move that into a private placement, so they pay less tax on that, and they're not paying tax on those gains as it grows inside of a private placement. Premium finance, I have a premium finance policy, which is simply let the bank finance the policy, just like you might get a mortgage on a house. I've essentially got a mortgage, so to speak, on my insurance policy. And the reason I did it is because interest rates were so low for so long that I was taking advantage of those low interest rate environment to something that had a higher guarantee than the interest I had to pay. Now, interest rates changing has made it where I'm not winning every year now. Like before, it was like I was winning every single year. Now I have to kind of manage it year by year and understand, like, does it make sense to keep the loan or pay it off, because I still have all the cash value that's being earned and I have the policy. But you have to typically do a certain size of policy and a certain type of policy so that it has cash-rich enough situation to make it all work. But I mean, banks would much rather have cash value as collateral than real estate. We've seen banks suck at real estate. The whole REO thing, you're like, can you manage this worse on a short sell or take longer as this is happening? Cash is a much better situation for them, so they're willing to finance that. So I have 28 whole life policies because I started with $50 a month when I was 19. And now I have policies on my kids. I pay my kids tax deductible, and then that goes into the policy and grows tax advantaged. So it's all one of the few ways you can get it in pre-tax. Have policies on my wife, I have policies on business partners, and I've used those cash values over time. It's also nice when I don't want to invest for a while because maybe I'm writing a book, I just know I'm doing better than if it was just sitting in an account. And I don't want to have more than, I don't keep more than 1 month's expense at a bank. I just run bills through the bank, and then if I have more cash come in, I just start allocating it towards the policies, or sometimes Bitcoin, just for fun.
I like it. By the way, we can talk about that for a while too. And one thing I will say, if you study some of the more progressive family offices, you'll see that many of them are allocating 0.5% to 1% towards Bitcoin for those that actually have a crypto component of their portfolio. And so most are not taking big leaps on the rest of crypto. You really are only seeing it on Bitcoin and Ethereum.
That's where I'm at. I have a lot of Ethereum, a decent amount of Bitcoin, and then one thing I was speculated on. But I feel like crypto, by the way, like ICOs were just another way for Wall Street to extract value from people by telling a story with less regulation. So most of them, I used to say 90% of them are shit, but it was probably more like 95, 96, 97, maybe 99, I don't know. But it's just something that I like as part of my asset allocation strategy, which if we get to wealth frameworks is once you're financially independent, having some speculation if it's asymmetrical on the upside is possibly worth it, but I wouldn't speculate until you're financially independent, because then you're just slowing down this process that will accelerate wealth. Because just most people are they're being told, save 10% of your income and try to earn 10% in a diversified fund, and then wait for 30 years. That's a really terrible philosophy, and I can tell you why. 95% of people that do it are not financially independent at age 65. Not because of a lack of effort, but because it's an improper strategy. It's a bad framework. But what happens when you're financially independent? Like Justin can take 100% of every dollar he earns to buy more assets because he has enough cash flow from his trailer parks, for example, to cover more than his lifestyle, by far. So that's an accelerated factor. Like people talk about 10X a lot of times. One of the best ways of 10X is create cash flow from assets so that every active dollar can build more assets. Now you have 100% of your income going into something instead of 10% that you're waiting for 30 years. And what frustrates me even more is people are trained, taught, and indoctrinated that you should save your money without consideration of cash flow in a retirement plan so that 30 years from now, or age 65, whichever's greater, whichever's longer, that then you're gonna have to learn how to manage cash flow when you no longer are responsible for the outcome of your income. You're simply out of the game of value creation, which is a dumb idea. Create a life you don't want to retire from. The Lifestyle Investor's about that. You create a life where you get to go on some trips, and then you come back and create value. When I went to Italy for 3 months, it was fantastic, but I was ready to come back and do things again. Like this whole FIRE movement, where people are just living the cheapest life possible, I get, let's opt out of consumerism. Consumerism isn't healthy, where we think materialism will solve our problems and make us happy. It won't. It's an addiction that we can't get through. But reducing our value and service to society in the name of living a mediocre life where we manage expenses all day and do the least amount possible, I have a phrase for that, but it swears.
I love that. I love just your outlook on all those things. And by the way, what happens if you do that strategy and you live in a country like Argentina where inflation goes through the roof? You could have been the best saver. You could have followed all the rules. You could have done everything right, but it doesn't matter. You
Venezuela,
can't
Mexico,
right.
All these places.
All
right?
of them. And by the way, what's to say that our country isn't going to have that? I mean, look at what our inflation has been.
You know, when they say, we didn't print money, I want you to be clear, we did not print money. We added $4.5 trillion to the balance sheet by hitting a computer button. That's why there's inflation. It wasn't a supply chain issue.
Nope.
It was simply that we added $4.5 trillion with the click of a button without printing a single dollar, and it's documented. You can read about it. You can see it on the Federal Reserve's website. And yet we're talking about raising interest rates. That was the issue. No, we watered down the soup. Hey, thanks for watching. I appreciate it. And if you're enjoying these videos, well, there's good news. More where that came from, so go ahead and click through and watch the next video now.